All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, June 13th. So, what do we have today? I would say the word of the day was chop, and it's kind of been like this for the last couple days. It just seems like we've got the same pattern going on here where the majority of the move, which, by the way, this has been something that's has been the trend for a long time. The majority of the move is normally overnight, right? And that's something that you've heard me talk about a lot. But normally we get a bigger range than what we're normally seeing. Here's what. So I've been showing this spreadsheet and making some comments on it every day because it does kind of gives me a little bit of a hint of what's happening for the day, where money is being put to work. It's basically just percentage change from the open, right? So what's rallying throughout the session and what is being sold off. And we've kind of been getting a mixed picture when I run this, through the day. Sometimes I would say recently, and for the last, even though we rallied very nicely last week, still there seems to be a lot of defensives that are holding up a little bit better. Today just really wasn't much of a move either way. You did have some things like gold miners, which have been moving pretty nicely the last couple days. Look at solar actually did pretty well. I think First Solar coming back a little bit today after yesterday it was sold off. We'll look at that chart in a second. Transports actually did okay, but again, anything I have in here in which is not colored means that the move is less than 25 basis points. So again, I'm not looking at overall change, but just to see what happened, because if you note, for example, IWM finished up 1% for the day, but most of that was in the overnight session. And during the day, we're just not really seeing too much. We're seeing the repeat of things start to rally a little bit on the open, like in the first 10 minutes, and then we just kind of fall back down a little bit. So, at least the positives of that are, if you are doing the right thing right now, which is putting a little bit of risk to work at the end of the day, you have that opportunity more often than not recently to kind of take that off in the beginning of the day, and then you can go and feed the ducks for the day because it seems like that's what we're getting right now. No breakdown, a couple bouts of volatility. I mentioned in the trading room, when I see, like a little green bar in the VIX, a little uptick in the VIX, but it just doesn't seem like we're doing anything that substantial in either direction. Notice that on the 5 minute bar, we touched the top of value twice. Really, so the thing is, what's going to get us? What's going to get us to get out of the range? Notice that we closed right at this 28.95 level again. And that seems to be the barrier. So again, the market webs that the indicator that we use, and that most of Tribeca Trade Group members use and enjoy, doing exactly, just giving us a heads up and saying, hey, we're still in range, and we're having difficulty with getting out of the month's value area. So, perhaps if we do punch out and get a close above value, then maybe we'll start to move. But We've got some events for next week that are starting to pile up a little bit. Well, first of all, I think tomorrow we get retail sales, and what else? We get there's one other data point out for tomorrow. I'll think of it in a second without bringing it up on Bloomberg. But it's not ISM. It's I think capacity utilization or something to that effect. Anyway, I'll move on. But that's really not the big event. The big event is going to be for next week is the FOMC meeting, and I think right now they're implying a which I don't under now. Granted, I'm going to give you my opinion. Sometimes I don't give much of an opinion. I basically just tell you you know, what is working well based on. I try to follow price. That's my number one thing that I follow, and really just try to basically follow the trend. But I will give you my opinion on some things, and so their price at wow, this actually moved up. So what I'm looking at is in this column. I tweeted this out earlier, and if you saw the screen print, it was 19%, and now they're saying there's a 27% chance of a cut next week. Now, if you're watching this video and you disagree with me, you know, please certainly let me know. But I have not heard Powell say anything about a Fed cut. What he's been saying is that they're there as in case anything, if the economy, again, correct me if I'm wrong, but I'm just paraphrasing here. What I've heard and listened to, listen to Powell and try to understand what his main thoughts are, and which I think they're going to be a backstop for now. If the trade wars really heighten and get nastier, they're going to be there to cut rates. But they haven't said, they're still data dependent, and they haven't committed to that by any means, and nor have we even heard them say that that's going to be in the cards in the next couple of Fed meetings. They're kind of just leaving it a little bit open ended. So that said, I don't know why we're implying a 27% chance of a cut in Fed fund futures and an 86% chance in July. So this doesn't make a lot of sense to me, and it's troubling to me because if the market expectations are not in line with what the Fed is going to do, then there could be a little bit of a shock that comes on Wednesday if they come out and say something like, "Hey, no one said we're going to cut rates." The market's going to fall apart because I think being that this is the case is that the market is pricing in really accommodative measures. So, again, I don't know that, and I'm just kind of, wanting to make sure that you guys are aware of what the market is pricing in, and then you can make your own judgment, and you could be prepared based on that. And again, I would not feel, I would not have any reluctance to put on a hedge for this meeting if that's what it is. And I'll tell you right now, if that's the case, I would want to either have a really light portfolio, for your trading portfolio going into this meeting. Again, long-term portfolio, I probably will do nothing. But for my trading account, I will basically either have it really light going into the meeting and maybe have some positions that I think are less exposed to all of this. Maybe a little bit more on the defensive side. Something to think about, and I'm sure we'll be going over trade ideas next week in the trading room. I will not be putting them out on the video. That's for the trading room. But I will certainly be having some trades if the expectations look like this going into Wednesday. So I think that's the main event. Then there's some other things. We have quad witching, right? If you don't know what that means, quad witching, of course you could Google it. But again, it's all of the S&P and NASDAQ will rebalance their indices. So we might actually see some whipsaw moves in some single names because the brokers who actually have to trade the rebalance for the funds who are benchmarked to S&P and NASDAQ, they will be trading. What happens is they start to what's called pre-position before the close of business next Friday, right? So the S&P will actually announce the official changes as well as NASDAQ after the close this Friday, and portfolio desks at big institutions like Morgan Stanley, Goldman, Barclays, Merrill Lynch, or Bank of America Merrill Lynch, they will all be pre-positioning for those flows. Either they're already probably making some conclusions at this point, but the official numbers come out on Friday. So that's one thing that happens next Friday. And then, of course, futures will roll. Futures expire on the open of Friday. So anyway, I'm not going to go too much more into that, but that's for next week. So there's definitely some events that will take place next week that can really kind of start to push this market. So, best practices for this week. I kind of tweeted this out earlier. When we come across chop, really, I think trading less. Not so much trying to trade, weekly options and that kind of thing, unless you're in and out like in a couple seconds or in minutes. But I think trying to trade short-term options in this kind of chop is more often than not you're going to lose money. It just is what it is, no matter how good of a trader you are. Selling premium is really good right now. However, the reason why I'm not really, and I looked at some trades to kind of sell some premium, I do think that we're going to move next week with that Fed meeting as well as with quadruple witching. So I think you just, for me, I mean, unless you've been selling premium that expires this Friday, that I think works because we, other than retail sales tomorrow, I don't. There's no major events, but of course there could be always be something that we're not accounting for, or we don't, or is just in the unknown. But selling premium really helps right now, or you don't have to actually just structure new trades. But let's say if you're long XYZ stock out to August or September or December, January, you can sell a little bit of June calls, against your longer data position or your stock position. So, those are the types of trades that will do well in this environment. Uh, you know, and keep in mind, I see some people all the time on Twitter, they talk about just weekly options. You could trade whatever you want. You don't have to. As the market changes, in my opinion, you need to adapt to it, right? So doing the same thing over and over as the market changes, your results are going to be much different. You want to be flexible and objective and not rigid as the market changes. Um, what else to kind of talk about really quickly? The Fang stocks, they seem to be the reason why I bring the Fang stocks up so much, because I barely trade them, is because I see so much activity, about them on Twitter. I just think there's not much of a trade there right now. Mark, I've talked about this for, well over a year, but talking about not being rigid, I see some people tweet the same things about the Fang stocks. They haven't had market leadership for a long time. You don't need one of these stocks to. You don't need all of the Fang stocks to move in order to see new 52-week highs in the S&P. All you have to do is basically look to see that we made 52-week highs in the S&P back in the beginning of May, and none of the Fang stocks made 52-week highs. So how is that possible? It's very easy. The Fang stocks are not market leaders anymore. So please, if you see these things on Twitter, call them out, because because people say something confidently on Twitter, it doesn't mean that they're right. And I see this nonsense all the time about the Fang stocks need to go up because or I've heard also the bank stocks, right? The banks and financials need to go up. They didn't go up here. So, there's always, in my opinion, market leadership changes, right? So, what's leading the market right now? Unfortunately, it's a little bit of defensive stocks. And I think the software stocks are, I mean, this is a chart right now. This is minimum volatility, right? So, this is at a 52-week high. So there is a portion of this in the S&P. And right now, that's where the market leadership is right now. So it's consolidating at highs. I'll talk a little bit about today's activity. I'll talk a little bit about, how I'm trading. Here's my trades for the day. This Home Depot position that I put on yesterday was just a third of a position because, there's no certainties. And I thought if Home Depot actually pulls back a little bit more, I would add to it. But got a nice little winner out of Home Depot. I did not catch the Disney trade today. That was an awesome trade. We actually went over Disney in the chart forum yesterday. We went through a bunch of charts, so we did look at this, how it's been. Keep in mind, right? Once stocks get out of a multi-year range, they can get pretty exciting, and certainly we saw that. And patterns aren't always perfect, but this was some type of, wouldn't say a bull flag because we broke out of here and then checked back, but checked back right into support, which I think is what we went over yesterday. So the price target raised by Morgan Stanley, the catalyst for the day, but there was all that momentum call buying as well, and the thing closed on its highs and almost got back to the 52-week high. So congratulations if you took this trade. So that had momentum. Home Depot finished on close to the highs of the day. I'm looking at this 205 VPOC. Square, I hit a target in today. I'm looking. Somebody asked me what's my price target. $75. So I did take one target, but because there's no certainties. but I would be getting out of that position at 75. A couple bad things for the day. Well, not bad, because this is why you take targets. Cadence mentioned that I took several targets in this rip up here, but it hit resistance, top of value, and backed off. So pretty nasty looking bar. And I saw a bunch of that in some of the software names. So that's why I haven't kind of repositioned back into software. I think it needs just to consolidate a little bit. So, you kind of have to wait and see. Zscaler had a real nice day today, almost back to 52-week highs. So again, this chart look better than Netflix, which hasn't moved since the first week of January. So again, that's what I'm here to do, is to help you find trends and not get bogged down in a 6-month base. I saw someone a couple months ago was talking. Someone made a really nice point on Twitter about this Netflix hasn't done anything, which I agree. And someone said, "Oh, well, you have to have patience." Patience for what? So you basically, yes, you could set an alert and wait for a break out of the range, but in my opinion, there's no reason to be in this stock right now. It looks terrible, and it looks like it might be breaking down to 330. So again, you could set your alerts, and if it does act up, you could be ready. But there's no reason to be to think that the longer you wait, like the better this is going to get. I don't really agree with that logic. But again, and sometimes just stocks that have had big runs, they can consolidate for a long time. So just final message for the day. See how I definitely go on rants when the market's not moving. What else did I trade? I traded a little bit of Etsy for a small winner. But again, I think this is a market right now, until we get outside of this range. It's a hitting singles and doubles. If you're trying to shoot for home runs right now, they're few and far between, right? If you caught Disney, congratulations again to you. But I think right now the market is treading a little bit. What's also doing pretty well is obviously bonds and gold, which I am starting to get excited about gold a little bit, because it may be breaking out of one of those ranges that it's been in for a long time. Now, I know gold has been extremely tricky, but if it does get out of range, maybe it does get a little bit of momentum to it. This is bonds. It's been putting in this type of bull flag or pennant. I see another VPOC up here at 132.84. I'll just leave with gold to be the last thing. And just finally, just to say, all these things that I've been talking about, and I think best practices in a choppy market. If you're following some of these things and you're managing through this market and not getting too chopped up, congratulations to you, because it's not easy. All these things that I'm talking about are easier said than done. So if you're managing to practice some of these things and sit on your hands and not overtrade, then you're doing a great job. So just keep in mind that, and give yourself a pat on the back for doing so. If you're staying out of this market, or even maybe trading a little bit more stock than options, I think right now that's also a better way to go too. Because if the market chops, it's like no big deal if you're owning stock. So anyway, gold 127 would be the level that I'm looking to break out. So that's it for today's video. I did go a little bit longer than I thought, but looking forward to Friday's market action, and I'll see you guys bright and early in the pre-market session tomorrow at 9 o'clock. Have a great night, everybody. See you tomorrow.